Good evening, everyone. I hope you're doing great. My name is George, and this is the Contenders live stream number 164, reversal pattern updated. So, in order to understand what's going on in this stream, I would like to start with this. You need to remember that I've made two streams about reversal pattern. If I remember correctly, that would be the Contender stream number 145 and 148. So if you watch those streams, this should be just an updated version. If you haven't watched those streams, my advice is to check those streams first, because there I explain everything in detail, and this is just an updated version of that stream. With that being said, let's move to the stream, because we have a lot to cover today, a lot of example, and obviously, we will start with the trading disclaimer. None of the information shared in this stream can be used as financial advice, and this is only for education purposes. With that being said, and like I said, we have a lot to cover today, so let's jump straight into this stream. So, the reversal patterns. Up to this point, you need to take into consideration, like I said, this month I made like a series where I explained the risk management, how to trade ranges, and then now we move to the reversal pattern. So you think about this as a series. So up to this point, we talk about the risk management to understand how to protect your capital in each trade and how to trade ranges. That was last week, the stream about the ranges. Trading the ranges is giving a very good results right now, and basically you can see we have a range, and that range is very well respected. So if you are using the information shared in the last stream, you should be able to get some good trades. The next important part is to understand what is the trigger for a trade, right? This is the question that I get almost every day. What is the trigger for the trade? So this is what I'm trying to explain with this stream. And for that, we can use the reversal pattern. In this stream, I'll update the information from the previous stream, and based on your feedback, I will try to make it more beginner friendly. So the feedback was more or less, hey, that is a lot of information, so it is hard to use it in real time. So in this stream, I will try to keep everything as simple as possible and try to make it as beginner friendly as possible. I hope I will succeed that. There are two reversal patterns that I'm using when I'm trading. The first reversal pattern, and the easiest one, is at the retest, the price is making a higher low if we're talking about a long trade, or the price is making a lower high if we're talking about the short trade. This is the first scenario. Like I said, I'm not getting into too much details. Please watch the streams where I explain this in details. For the second scenario, after the swing failure pattern of the main confluence, the price is making a new lower low if you're looking for a long trade, or a new higher high if you're looking for a short trade. This reversal is built on the idea of a second swing failure pattern, a fake out, a swing failure pattern of a swing failure pattern, and the main reason is to stop out all the early traders who opened their position at the first swing failure pattern. This is also a very good pattern, works really well. So I'm trying to cover as many scenarios as possible, so when you see the next trade, the next reaction, when you want to open a trade, you know exactly what to look for. To these patterns, I need to add another one, and that would be a perfect touch of the main confluence, or a very small front run, usually is less than 0.1%, or a swing failure pattern, just a small swing failure pattern, so a wick to the upside or to the downside, and then the reversal. And after that, you see the price reversing without a retest. This is the main thing about this. And obviously the price action that we had in the last couple of weeks, sometimes you see like the price going pretty fast to the upside, to the downside, the reversal, but without an actual retest. So you can use the first reversal pattern, for example. That is why I wanted to add another reversal pattern, because like I said, everything here is based on my trading experience. Sometimes we can see a retest, but the retest comes later, and it is usually between 0.382 and the CC. Also, the difference between the original entry and the retest is 1% or higher. Again, depend on the situation, 0.5, 1%, but usually what I'm trying to say with this is that the retest doesn't give you like a very, very good entry. Now, it depends. If you're looking for a swing trade, then definitely you can use that retest. Sometimes if you're looking for a scalp, the retest comes a bit later. and it's not going to give you like the best entry possible. This usually happens when we have a high time frame confluence for a possible full reversal. Also, it can be used for scalping and day trading as long as you have a good confluence and it works only on the first touch. We can call this the third scenario. The reversal patterns, this reversal pattern is associated with a very fast price action, and you need to be more aggressive with your entry for this reversal pattern. So keep this into consideration for the rest of the stream. Those are the main reversal pattern that I'm using when I'm trading. Very important note. When applying the reversal pattern, you need a very good confluence for the trade, and you need to think about the context too. The reversal pattern would not give you a trade. The reversal pattern will only give you a very good and safe entry, but without a good confluence plus the context, there cannot be a trade. I would not trade the reversal pattern in the middle of nowhere or without a very good confluence. So this is really important. So the reversal patterns are when you have everything set up already for a trade. You have your confluences, you have the context, you have everything. And the reversal pattern, the only thing that would give you is the actual entry, the trigger for that trade. But it will not give you a trade, right? So you need confluences, you need context, and then you can apply the reversal pattern. This is really, really important. Other than that, if you trade the reversal pattern, even if you see the reversal pattern and everything looks good, if you don't have a good confluence, is in the middle of nowhere, my best case that will end up in a losing trade. And obviously we want to avoid that at all costs. I want to make sure if you can hear me. Let me see what I have. Sound is great. Thank you. Thank you for the confirmation. That is exactly what I wanted to hear. Moving forward for the stream. The trigger for the trade. This is where it becomes really, really interesting. Now that I covered the reversal patterns, we need to see what is the trigger, the reaction when I want to open a trade. For reaction, I check market structure, really important. Market structure, volume, open interest, delta, CVD, imbalances, and liquidations. Those are the main things that I check when I'm looking to enter a trade for reaction, for the trigger for that trade. And now let's see how can you use this information for each reversal pattern. In this stream, I will cover market structure, volume, imbalances, and liquidation. And next week, this is a two-part stream. And next week, I will continue with the open interest, delta, and the CVD. Also, I will try to make it as beginner friendly as possible because I understand using this information in real time could be a bit difficult for a beginner or an intermediate trader, especially when the price action is really fast and you need to make a trading decision in seconds. So that is the main purpose of this stream, to make it more beginner friendly, also to update because we are evolving as traders and everything is changing. So I wanted to update the reversal pattern, the first two streams that I made about it. So now let's start with this, the market structure. The market structure is one of the easiest and the most important tool to use when we are trading. Now I'll show you how to use the market structure for each reversal pattern. Things to take into consideration. When we are looking for an entry, the best entry possible. So we need to use the market structure on low time frame, 1 minute, 3 minutes, 5 minutes. This is what we're looking for because we are checking the reaction on low time frame and we want to get the best entry possible, but also with some confirmation for that trade. So we need to use the market structure on low time frame, 1, 3, 5 minutes for the best results. For the reversal pattern number 1, in some situation, the market structure can be used as a trigger for this trade. For the reversal number 2 and 3, the market structure can be used more for confirmation for that trade, but it cannot be used as a trigger. You'll see why I'm saying that. I will explain this in just a few moments. For the first reversal pattern, when the price is making a higher low or a lower high at the retest, the market structure is very easy to use and it is part of the retest. Best case scenario for a short trade, the price is making the first lower low, followed by a lower high, and then another lower low. That would give us the change in market structure and more confirmation for that trade. For this reversal pattern, you need to enter at retest when the price is making the lower high. Best case scenario for a long trade, the price is making the first higher high, followed by the higher low, and another higher high. That would give us the change in market structure and more confirmation for that trade. For this reversal pattern, you need to enter at the retest when the price is making the higher low. And now let's see some examples. I would use EXO for this. So basically those are a few examples. Let's start with this one. I have it marked here, right? So like I said, for this reversal pattern, basically the price comes here, then you don't enter here, you enter at retest. Usually the retest comes somewhere around the CC, and that is where you want to enter the trade. Best case scenario, this is not the case for this one. Best case scenario, you want to see the price making a higher high here, then a higher low, and then the other higher high. At the retest, when the price is making the higher low, you can enter the trade. That would be the trigger. And I have another, this is obviously an example for a long trade, right? And now we need to check the other example. Let me see if I can find it really fast. Okay, and that would be for a short trade. And this is a better example because with this example, we actually get the change in market structure. So here we can see the market structure, the price is moving to the upside, higher low, higher high, higher low, higher high. So here you can see the reversal. And for the first time, the price is making a lower low, followed by a lower high. You can see somewhere around the retest, and then the price comes here and makes another lower low. So in this situation, you can enter at the CC at the retest when the price is making a lower high. This is a good example for the change in market structure. This is exactly what you want to see when you're looking for a trade. This would be a good entry, I mean the retracements to the CC, and also a safer entry. So please keep this information into consideration. So that would be for the first reversal pattern. For the second reversal pattern, when the price is making a new lower low or higher high, depending on the situation, your entry can be triggered by the second swing failure pattern, an aggressive entry. And for this scenario, the market structure cannot be used for a trigger, but it can be used for confirmation. If after your entry, you can see a change in market structure, the chances for that trade are increasing. The chances for that trade to be a successful trade are increasing. After the second reversal pattern, most of the time you see the first reversal pattern applying, and you can use it to get a safer entry. In this scenario, the market structure can be used as described for the first scenario. Now let's see some, I hope it makes sense. If not, you can ask questions, and obviously, again, this is a lot of information. Maybe you need some time to process and to actually use it for trading, for a live example. And now let's see some examples for the second scenario. Let me move this like this because I will use the same examples for all the scenarios and for all the tools. And here we can see the second scenario applying. Right, so for the second scenario, you see the price making a lower low, then the price is trying to bounce, and after that the price is making another lower low. In this kind of situation, you can trade it very simply as a swing failure pattern of this one or this one. So when you see this swing failure pattern, you wait for the swing failure pattern to happen and you trade it. This would be the aggressive entry. Most of the time when this, and basically you can see the push to the upside, right? And after this scenario, most of the time you see the first scenario applying, right? So you can see after that, the price comes down once again, touching the CC, and then the price basically follows the trend. So the way you can trade this scenario, you can trade it very aggressively as a swing failure pattern. That should be your entry, right? And this is actually a good example, and you'll see why later in the stream. Or you can wait for more confirmation, and usually the first reversal pattern applies. So that is for a long trade. And let's see the other example that I have. Okay, this is also for a long trade. Okay, in this scenario, you can see the price comes here. You know, the price is trying to bounce, and then the price comes down once again, swing failure pattern, and then the reversal actually happens. In this kind of situation, you can see the first reversal pattern applying, and in this situation the backtest doesn't go straight to the CC, and it goes to the 382 0.5, somewhere in this area. Most of the time the backtest is somewhere around in the 382 and the CC. Could go lower, yes, 786, 886, but usually it is around the CC. Okay, let's put this like this so I can find examples, and we need to move forward. For the third scenario, the market structure cannot be used for to trigger the entry, but again, it can be used to get more confirmation for the trade. Also, if we get a later retest, by then you should see a market structure including on higher time frame, 50 minutes, 30 minutes, including 1 hour. And let's see a quick example about the reversal pattern number 3, sorry, the latest one. So we have this one here. I marked this to find it easily on this chart. So in this situation, you can see the price pushing to the upside, really fast price action, and actually you don't get like a very good retest. You can call this a retest, but most of the time you'll see this, and then the price moves to the downside. So obviously for this kind of scenario, you don't have enough time to check the change in market structure. If the market structure change comes later, that can be used when you see the change in market structure. That can be used as additional confluence for the trade. So if you see the change in market structure, the chances for this trade to be a successful trade are increasing. And I have another one, and that one, if I remember correctly, is actually the higher high. Yes, this one. Let's check what happened here. So again, the price moves really fast to the upside, then rejection. Here on low time frame, you can call this a backtest. This should be around the CC, but other than that, you can see the what I would call the real retest comes a bit later. And at this point in time, you usually see the market structure has changed here. So when you enter, let's say you missed this one and you want to enter here, this is also a valid trade. You can see that we already have the change in market structure, and the retest comes later. So you can see it's not okay. You can call this one, but other than that, the real retest, when you want to see everything, you want to check the strength and everything, comes just a bit later. So comes after, I don't know, 30 minutes, 1 hour, or even more. Okay, so that would be the first, the third reversal pattern, the last one that I added to the reversal patterns. Okay, moving forward. So first, this is the market structure, and this is how I use the market structure for the reversal patterns. For the first reversal pattern, it can be used as a trigger. For the second and the third, can be used as additional confluence to give you more confidence for that trade, but it cannot be used for the actual trigger for the trade. The next one is the volume. The volume is one of the most important part of the reaction, together with the market structure when you're looking for a trade. The volume is giving us information about the intention of the vast majority of traders at each level. For a reversal after an uptrend, you want to see the volume slowly decreasing towards the top of the move, and after the reversal, you want to see the volume increasing to the opposite direction. Also, you want to see a change in market structure. For a reversal after a downtrend, you want to see the volume slowly decreasing towards the bottom of the move, and after the reversal, you want to see the volume increasing to the opposite direction. Once again, if you see a change in market structure, that information can be used as additional confluence to give you confidence for a trade. Please allow me to take a drink. And let's continue with the stream. This is really important. If the volume is constantly increasing following the trend and you don't see a change in market structure, the trend could continue, and the possibility for a reversal is actually very small. Now we need to see how can you use the volume for each reversal pattern. For the first reversal pattern, you want to see the overall volume decreasing, and most important, you want to see the volume clearly decreasing at the retest. Together with the change in market structure, the chances for the reversal are increasing, right? So Now we need to see some example. Let's move back to the examples, and we need to see what's going on with the volume. So let's start with this one, right? So here you want to see the volume decreasing overall, right? So you can see here 29, then we come with 10 million. So you can see the volume is slowly decreasing, but most important, you want to see the volume decreasing at the retest. So let's check. So we do have 10 million, right? And at the retest, we actually have 4.3 million. So the volume is clearly decreasing from 29 to 10 to 4.3 millions. That is something that you want to see. You always want to see the volume decreasing at the retest. This is the main stuff that the main thing that you want to see when you're checking only the volume, right? And let's see the other example for the first reversal pattern. This is for a short trade, right? Hope you can see this very well. Actually, let me delete this one, and let me delete this one because actually we don't need it for the purpose of this stream. Okay, so here, what do we see? We need to see the volume slowly decreasing towards the top of the move. Here we're looking for a short. So 9 million, 7 million, and on the top of the move we have 4 million. So in this section of the chart, we can see clearly that the volume is decreasing, right? We see the first push to the upside. We see the volume already started to increase to the downside, and then the retest. Remember, at the retest, the volume needs to decrease. So here we do have on top, we have 4 million, and then the retest, we do have 1.4 million, basically nothing. So you can see less than 1 million. So the volume was clearly decreasing. This is very, very important. At the retest for this reversal pattern, the volume needs to decrease, right? When you see this together with the retest of the CC, change in market structure, the chances for this reversal pattern to play out are increasing quite a bit, I would say. And basically you can see the reversal pattern playing out. Now, you could see yes here, but what's happening after that? That really depends on the confluence. So this is a low time frame confluence for a scalp. What's happening after that? That is totally different story. We talk about only the trigger for the trade. How do you find confluences, context? That is totally different story, and that is really important to take into consideration. This is only the trigger for that trade, right? Let's zoom out so I can find this the next time when I'll need it. Okay, now that was the volume for the first reversal pattern. Now for the second reversal pattern, you want to see the overall volume decreasing. The second swing failure pattern should be with a decrease in volume, and if after the second reversal pattern, when you see the first reversal pattern playing out, you also want to see the volume decreasing at the retest. Again, the change in market structure is increasing the possibility for this reversal. So let's see how that looks when we do add the volume, right? So we need to see this again. I will delete this one and delete this one so you can see this actually better, right? So here, what do we need to see in terms of volume? You want to see the volume decreasing. So here the price is moving to the downside, 29 million, that's quite a big volume, 11 million, 10 million. So we can clearly see that the volume is slowly decreasing here from 29 to 10 million. And after that, if the first, sometimes the reaction is very, very fast and you don't see a backtest, but most of the time you'll see a backtest. And then after the second reversal pattern, you can play this into the first reversal pattern. So once again, at the retest, you need to see the volume clearly decreasing. So we come from 29, 10, and then at the backtest, we have 4.3 million. So obviously the volume is decreasing here. When you see that together with the retest, together with the change in market structure, you know, the chances for this reversal pattern to play out are actually increasing. And let's see the other one. Let's see what do we actually have here. So the price is pushing to the downside, right? We have 16 million, right? Here we do have 6 million, so the volume is decreasing. And at the retest, basically we do have nothing, almost 2 million, something like this. So once again, you want to see the volume clearly decreasing at the second swing failure pattern, right? When the price is taking the low. And after that, at the retest, if the first reversal pattern is applying, you want to see once again the volume decreasing. As long as you see the volume decreasing, the chances, obviously market structure and everything else, the chances are increasing for this pattern to play out. Okay, let me zoom out like this, and let's move to the file. Okay, so we've covered this. For the third reversal pattern, you want to see the overall volume decreasing. So the volume decreasing. However, using the volume is a bit more difficult for this reversal pattern because most of the time, the last candle before the reversal, you see a lot of volume. Also, we cannot use the change in market structure for this scenario because if you wait for the change in market structure, you already missed the trading opportunity. So we need to use another information when trading this situation. First, it is really important the confluence that we have at that level. It has to be a high time frame confluence, multiple confluences if possible. Also, the order flow is important to make a trading decision. And I'm going to cover a few indicators that can be actually used for this scenario. So let's get back to the chart for this reversal pattern, right? So we can hide this one and we can hide this one and check what's going on here. So for example, in this situation, right? You can see basically the volume here, okay, is actually very, very big right on top of this move. So 29 million. So in this situation, you can say, wait, the reversal, the volume is increasing. So why would the price will reverse here? Well, that is why, like I said, you cannot use the market structure, and using the volume is a bit difficult, right? For this reversal pattern, the next stream will add even more information and will become easier to use. But check this, 29 millions of the volume was clearly increasing right on the top. So this, the last candle, you'll see most of the time you'll see big volume here. Also, let's move to the candle where we had that high, the top of the range, right? So we can see basically the volume was actually increasing here, and this candle, right, this one, 25 million. So obviously this is big volume, right? After that, the top one is 90 million, but still good volume in this situation. And if we apply the retest, look at the retest. So 25 million, and then the backtest 4.1 million, backtest 6.3 million. So clearly the volume was decreasing in this section of the chart. But other than that, like I said, the volume is really, really hard to use, and you need some additional confluence, and I will cover that in the next contender stream. But for the moment, like I said, let's keep it like this, and let's see how can we actually trade this pattern and obviously the other pattern using only the information that I'm covering in this stream, right? Then we move. So we cover market structure, we covered the volume. Now we need to move to the liquidations. The liquidations are very important for a possible reversal, and they should be present in all the reversal pattern. Usually the bigger the liquidation, the higher the chances for a reversal. If there are no liquidation, this can be seen as a red flag and the reversal is less probable. I see the liquidation as a sign for finished business, quote unquote, and I covered this in the risk management part 2. In that stream, I covered this part. Please, if you missed that one, please check that part of the stream. And if we see liquidations, the chances for a reversal are increasing. Now we need to see how to use the liquidation for each reversal pattern. Right. For the first reversal pattern, you want to see big liquidation at the top or at the bottom of the move, depending if you're looking for a short or if you're looking for a long, but you want to see big liquidation at the top of the move. And if possible, it is good to see some more liquidation at the retest, but it's not necessary. and together with the change in market structure and the volume decreasing are part of the trigger for this trade. Now let's move to the examples for the first reversal pattern, and let's see what's actually going on here. Right, so this one is, yeah, this is the one. I want to make sure that I get the right one. So you want to see big liquidation at the bottom of the move, right? So we do have big liquidations here, and also, if possible, you want to see liquidation at the retest. Not necessary, but if you see their liquidation, you know, the chances are increasing. Obviously, like I said, market structure, volume, and so on, that would give you more confirmation for this trade. But you definitely want to see liquidations at the bottom, or because here we talk about a long trade. Now we move to the short trade here. You want to see liquidation at the top of the move. Obviously, the liquidation are here and some here. The bigger the liquidations, the bigger the chances for a reversal. In this case, we do have some liquidations around the retest, but like I said, for this reversal pattern is not actually necessary. If you see, now the chances are increasing, but they are not required for this reversal pattern. Okay, so that would be the first reversal pattern. For the second reversal pattern, you want to see liquidation at the top or at the bottom of the move. Really depends what you're looking for, a long and a short. And very important, you want to see big liquidation after the second swing failure pattern. If you cannot see big liquidation after the second swing failure pattern, that can be seen as a red flag. The reversal pattern can be invalidated and the original trend could continue. So this is really important. You want to see liquidation at the first touch, but really important, you want to see big liquidation when the second swing failure pattern, the lower low or the higher high, is formed. This is really important. If you don't see liquidation after the second swing failure pattern, the reversal can be, and this pattern can be invalidated. Once again, let's move to the examples. It should be for the second. Right. So you can see here, we do have big liquidations at the first touch, and then also big liquidation after the second swing failure pattern, the second lower low for this situation. Again, same story at the retest. If after this the second pattern, if it continues with the second with the first reversal pattern, so the second continue with the first one, if we see liquidation, that is really good, but not necessary for this pattern. You definitely want to see liquidations at the second retest, at the second swing failure pattern, locally speaking. This is really important for this reversal pattern. And now let's see the other one, where it is. Okay, here it is. You can see, same story here, big liquidations here, but most important, you want to see big liquidations here in this area. This is exactly what you want to see. If you don't see this, you know, there is the potential that this trend will continue. Again, at the retest, we don't have liquidation, but also is not necessary. If you see the second reversal pattern continue with the first one, you know, that is not necessary. If you see some, that's good. Also, if you can't see liquidations, that is not a problem. Okay, like this. Okay. Important note. For both scenario, if after the reversal, when the price is moving to the opposite direction, you start to see big liquidations happening too fast, that can be seen as a red flag and the original trend can continue. And for this situation, what I'm trying to say by that, you want to see basically liquidations. So let me get to the examples. Let's start with this one to see exactly what I'm trying to say with this. So most of the time when you see liquidations, right, a reversal is possible. Could be low time frame or could be something more. So in this situation, right, we can see here after the bounce, we can see liquidations here, right? That will give us the retest, and after the retest, you start to see like very big liquidations here in this area, obviously you do see liquidations here, but maybe for this you start, what I'm trying to say, to put this very, very clear, you want to see liquidation when the price is approaching your take profit one, right? This is where you want to see liquidation. But for this scenario, for example, if you start to see liquidations somewhere, big liquidations somewhere in this area, this can be seen as a red flag, and the trend actually, could continue to the downside. And for this, maybe it was a coincidence, maybe not, who knows. But actually, if you check my stream, the daily update from yesterday, where I was talking about a trade, it was a swing failure pattern, a short based on a swing failure pattern. I gave the entry based on imbalances, and I will cover imbalances after the liquidation. And I was looking actually to take profit. I was looking for liquidation, and I said, if you start to see liquidations, and also we had bullish CVD divergences there, but I'll cover the bullish CVD divergences and the bearish one next week. But when you start to see liquidations, the liquidation should be where you want to, very, very close to your take profit one. If you see the liquidation appearing like too fast, that could be a red flag. And that is a good example, actually, what happened yesterday. Please check that update. Also, if I remember this, let me move this really, 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 really fast. So it was here. I covered this price action on Friday. On Friday, when we've seen this drop, check this. We don't have liquidations here. So if we don't have liquidations, right, this trend could continue. And I said, if you watch the stream, okay, you can see liquidations here. I said, this is a good take profit. And after that, I'm willing to trade the retest. But the fact that we don't have liquidations here, you can see we don't have liquidations. That is a red flag, and the trend could actually continue. And you see here, when the price starting to make lower low, lower low, you start to see the liquidation. So definitely, definitely, definitely you want to see liquidations for a possible reversal. The liquidations are very, very good for a possible reversal. Now, that is for the first and the second scenario about the liquidation. For the third scenario, the liquidations are fundamental. You want to see big liquidations happening when the price is tapping the main confluence for that trade. If there are no or very few liquidation, that is a red flag, and the chances for that reversal are decreasing a lot. Exactly what I was showing you earlier. Right, let me get back once again here. So let's say this is your main confluence here, right? The price is tapping that confluence. If you don't see liquidations, the possibility for the trend to continue are increasing. And basically you can see the price starting to make lower low, lower low, lower low, lower low. When you start to see liquidations, then the reversal is possible. But here we don't have liquidations. So, even if this is your main confluence and you don't see liquidations, other than that, the trend could actually continue. So this is a red flag. You don't see liquidations here. That is a red flag for a possible reversal, right? That is a very, very good example, to be honest. So again, for the third scenario, you want to see big, big, big liquidation when the price is touching that confluence. Could be a small front run, could be a perfect touch, could be a small swing failure pattern, but you want to see liquidation. Without the liquidation, this reversal, I must say, doesn't have too many chances. And now let's move to see actually the example for this reversal patterns. You can see here big, 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 big liquidations, right? When you see this, the chances are increasing. Doesn't mean that if you see liquidations, then that is your trade and you are 100% guaranteed that the trade will actually work out. No, but we talk about chances. We talk about the possibilities, that is what we are doing in trading. And when you see liquidations, the possibility for that setup to play out are actually increasing. Also, the other one, the high, where is that one? Here. Obviously, you can see here, like, once again, big, big, big liquidations in this area. This is definitely what you want to see for a possible reversal. So remember, especially for this, for the third scenario, for the third reversal pattern, the liquidation are fundamentals. Without the liquidation, the trend, my best case is that the trend could continue. Okay. So those are the liquidations. And I explained how you can use the liquidation for each scenario, right? So the liquidations for this, for the third scenario, can be part of the trigger, right, for this trade. And for the first one and second one, they need to be there. They will give you like pretty good idea about what's going on. And if you see liquidation, the reversal is actually possible, or the chances for that reversal to happen are increasing. Now we need to move to the last part of the stream, and that would be imbalances. The imbalances are maybe the most accurate trigger for a trade, and they can be applied for all scenarios, especially for the third one, together with the liquidations. When the volume and the market structure don't give you a lot of information, I use the imbalances to check who is in control in that candle when the reversal is possible, and I will explain how to use the imbalances for each reversal pattern. For the first reversal pattern, you want to see imbalances forming in the reversal candle, buying imbalances if you're looking for a long, and selling imbalances if you're looking for a short. And most important, after the retest, you want to see stacked imbalances together with the change in market structure, volume decreasing, and liquidations. That would be the trigger for my trade. So imbalances are the actual trigger for the trade, the way I trade it. Now we need to move to examples, right? So for the first scenario, right, we can see here that the price moving to the downside, and look at this, boom, 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 buying imbalances. Buying imbalances, this is exactly what you want to see. You start to see liquidations, right? The reversal, the back test. Here we do have some liquidation, is not necessary, but look at this, boom. Prices here, you can see stacked imbalances, stacked imbalances. This is the actual trigger for this trade. Again, coincidence or not, really is not important, but please check the stream that I made yesterday, where I was commenting live in the moment. And when I've seen the selling imbalances for that example, boom, that is the trigger for the trade. I said, this is the moment. If this is the bearish case, the price could drop. No, there is another story. If this is the case, this is going to be a good trade or a bad trade. But the imbalances are the actual trigger for this trade, right? You can see here this, and most important, you want to see stacked imbalances after the retest. This is the actual trigger for this trade. You want to see this information showing you that people, traders, are willing to buy this level. This is the trigger for the trade. Also, for the other example, right? So here we're looking for a short, right? You can see the price pushing to the upside, buying imbalances. Okay, I'm okay with that. Liquidations, right? And after that, we start to see selling imbalances, selling imbalances. That's good. Shows me that people are willing to sell here, to get involved here. But most important, at the retest. At the retest, you want to see stacked imbalances. Boom, boom, stacked imbalances, and the price could actually reverse. That is the trigger for the actual trade. You want to see stacked imbalances for this scenario. That would be the actual trigger for that trade. I hope this answers a lot of questions that I get, and yeah, I hope this will help you to become better trader, to know exactly when to enter that trade. Okay. So for the first, I already covered. So for the first reversal pattern, you want to see imbalances forming in the reversal candle, buying imbalances if you're looking for a short, selling imbalances if you're looking for a long, selling imbalance if you're looking for a short. And most important, like I said, at the retest, you want to see stacked imbalances forming together with the change in market structure, volume decreasing, and liquidations. That would be my trigger for this trade, for this reversal pattern. Really, really important stuff. Best case scenario for this reversal pattern for a short trade, you want to see the price moving to the upside with volume decreasing and big liquidations. When the price is tapping the confluence for the trade, price moving to the downside, creating a lower low on low time frame with volume, selling imbalances. At the retest, the price needs to create a lower high on lower volume and maybe some liquidation. And after the rejection, you want to see the price moving to the downside, making a new lower low with big volume and stacked imbalances. This is the best case scenario that you want to see for a short in this example. You don't want to see the volume decreasing to the downside. So after the retest, too many liquidations appearing and too many liquidations appearing too fast. That could be seen as a red flag. So remember this, the red flags are always something to take into consideration when you're trading the reversal patterns. Moving forward, that will be for the first reversal pattern. Now let's move to the second reversal pattern. For the second reversal pattern, you want to see a lot of stacked imbalances after the second swing failure pattern. Best case scenario, again for a short trade, you want to see the price pushing to the upside with volume decreasing. When the price is tapping the confluence, you want to see liquidations. After the rejection, you want to see selling imbalances and liquidations, shorts. You will understand better this next time and why I want to see liquidation. I'm okay with this liquidation. At the bottom of the move, the backtest and the second swing failure pattern has to be with a decrease in volume and a lot of liquidation. And after the reversal, you want to see the volume increasing with a lot of stacked imbalances and no liquidation, this time to the downside. The trigger for the trade would be after the swing failure pattern when I see selling imbalances, the aggressive entry, or you could wait for continuation with the first reversal pattern and I enter at the retest. Now we need to move to Excel charts to actually see those example and see exactly what I am talking about. So volume decreasing, liquidations after the second swing failure pattern, right? You wait for the swing failure pattern to happen, and after that you want to see this buying imbalances. In this situation we're looking for a long buying imbalances. That is your actual trigger for this trade. This would be obviously the aggressive entry, right? It will give you the best entry, but it is aggressive. Other than that, you can wait for the retest for the first reversal pattern to play out. And also here you can see buying imbalances, stacked buying imbalances. That would be the trigger. This one at the retest and something like this. As soon as you start to see this, that would be the trigger for the trade. Again, this is only the reaction. If your confluence is not good, if your, I don't know, the context is not there, even if you see this, you can see this candle to the upside, boom, and then candle to the downside. So you need a good confluence and context for this trade. The reversal pattern and the reaction only works if you have a good confluence and the context is there. This is just the reaction. This will give you the actual trigger for this trade. Don't trade this in the middle of nowhere without a good confluence. It will end up most of the time in a losing trade. That is really, really, really important. Okay, so that was the long. And where's the other one? Still for a long. Okay, so here you want to see volume decreasing, swing failure pattern, boom, and you want to see this. You want to see this. This is your trigger. You see buying imbalances, obviously continue. That would be the trigger for this trade. The buying imbalances for a long, selling imbalances for a short. That is what you want to see for the actual trigger for the trade. Right, so move forward. If you don't see a lot of liquidations, we're still at the second reversal pattern. If you don't see a lot of liquidation after the second sweep failure pattern, the volume is not increasing to the downside with stacked imbalances, that could be a red flag for this scenario. And the reversal, the reversal pattern could not work out for that trade. That would be the red flag for this scenario. For the third scenario, for the third reversal pattern, the imbalances are fundamental together with the liquidations, because we cannot use the market structure and you need some experience to use the volume for this pattern. After the reversal, you want to see the price moving to the opposite direction with a lot of stacked imbalances. The trigger for the trade are the imbalances, and they could be in the same candle, right, that tap the main confluence, or in the next one, depending of the situation. The lack of liquidations or imbalances after the reversal are red flags for this scenario. Now let's move to the examples. For this scenario should be this one, and we do have here. Right. Maybe this is not the best example, right? Because this scenario doesn't happen like every day. This happens only when we have like a full reversal or something like that. But in this candle, so the price is pushing to the upside. In this candle, you want to see selling imbalances. Obviously, it doesn't happen in this candle, but you start to see selling imbalances, selling imbalances, selling imbalances here. So for this scenario, that would be the trigger for this trade. We have a better example at the higher high. That is a very, very good example for this kind of fast moves, where you see this. You see the price pushing to the upside with buying imbalances, and after that, in the reversal candle, so could be in the same candle, so I'm okay with the price pushing to the upside with buying imbalances, and after the reversal in the same candle, you can see stacked selling imbalances, including filling some of these imbalances. If I remember correctly, we had the stream. I can't remember if it was a champions or a contenders. The stream was with all the coaches. Daniel, I was there. Victor, I can't remember about Igor. I can't actually remember that stream, but in that stream we had some volatility, and that is a live example about what I'm saying in the same candle. So the price was pushing to the upside with a lot of buying imbalances, and after that we start to see selling imbalances forming, and some of the buying imbalances were filled. That is a very, very good reaction when you're looking in that situation for a short. So you want to see the price pushing to the upside with buying imbalances, and then if it is possible in the same candle, you want to see stacked selling imbalances and filling some of these buying imbalances. Or in the next candle, you can start to see here selling imbalances, selling imbalances, stacked selling imbalances. That would be your entry. Also here, stacked selling imbalances, and you can see this is the trigger for this trade. Also, the stream that I made yesterday, soon as you start to see the selling imbalances, boom, you have your confluence. That was a swing failure pattern. It was the value at a high, the daily. We have a high there, swing failure pattern. Boom, you start to see the selling imbalances in that situation. Boom, that is your trade. So again, that is a very good example. And if you missed that update, please check it. It is basically from yesterday, so fresh information, fresh price action. So that is something that you want to see for a live trading situation. Okay, so those are the things that I wanted to cover. So market structure, volume, liquidations, and imbalances. Those are the things that I want to cover for this stream. And next stream, next week I will continue with open interest, delta, and CVD to give you like a full picture about what's going on. Now I want to see if we have some questions. Questions. Okay, so we do have some questions. Let me see. Like this. Questions. What is your trigger on the retest? The buying or the selling imbalances. That is the trigger for the trade. How do you decide if the 382 or better wait for the 618? Imbalances. That is the trigger for the trade. Now, obviously, again, I only cover like the most important parts of this trade. But even if you, let's say you enter a 382 and the price goes to 618 or CC, your stop loss should be always above the higher high or below the lower low. Give it some space, 0.1, 0.2%. So even if you enter at the 382, the price goes, let's say, higher. If you're looking for a short, you still would be safe. But the trigger are basically the imbalances. It is possible to review the pattern on today's price action. Today, reversal pattern 1 or 3. Sure, we can do that. Let me move here. So this one, right? So that is basically that is the trade that I was looking for. Daniel was looking for this trade too, because we had here. Let me use trading view. Okay, this is better. Okay, we had this high, right? Boom. We had this high for a swing failure pattern, and also not only this high, right? But also we had, if you use EXO, we had this naked session point of control, still untapped, but you can see like a really small front run. So we had multiple confluences there. And now if we move to the reaction part, right, I would say for this scenario, that would be the one. Again, really fast price action, you need to act really fast. Yes, you can enter at the retest, right? But for me, this is the one, the third one, the last one, the third reversal pattern. And also this checks out. I'm not going to go into details about this because I will cover this next week. But other than that, you can see the price pushing to the upside, a lot of buying imbalances. Again, I'm not going to comment on this, but this is beautiful actually what happened here. And then stacked selling imbalances. When you see this, obviously we need to take into consideration the swing failure pattern. But when you see this, this is the trigger for the trade, right? This is the trigger for the trade. Now, if this trade will play out or not, that is totally different story. And for example, here we had some sort of retest. This can be considered a retest. Like I said, sometimes you get a retest, but it takes some time for that retest to actually to play out, right? You start to see liquidation, you pull some fibs, so we are somewhere around the CC. So hey, if you missed this one and you think this is a good scenario, then this could potentially play out. Volume 32 million here, 2.7 million here. The volume is decreasing, so we need to see what's going on, right? But this would be the third one for me. So price pushing to the upside, boom. Stacked selling imbalances, that would be my trigger for the trade. Obviously, stop loss. Here, above this one, 0.2%, 0.1, 0.2%, that will be my stop loss. And really important, how you manage this trade, right? So we do have previous day high here. That is a good level. If you see this level lost, that's good. You don't want to see this level claimed. That is not the best situation. Also, value area high. You want to see here the price getting acceptance back into the value area of this range. So below the value area high in this situation. Other than that, as long as this is flipped to support, boom, more upside is possible. But that is why I said, so you trade, you see the reaction, you make the trading decision. If this would be the trade, if this trade will play out or not, that is totally different story. Or when you see the previous day high and the value area high here acting as support, at least for the moment, that is the moment you need to act, book some profits. That would be let's say you enter somewhere here, that should be, that's almost 1%. Take profit 1 there, and my best guess is that we do have some liquidations. You see, liquidations, bounce, liquidations, liquidations, bounce. As soon as you see the liquidations, that is something to take into consideration. So if you see this, you are aware that you are very, very close to the value area high. You start to see this, you need to act. You need to book some profits somewhere in this area. Now, if you book some profits here, you move your stop loss at entry. Even if you get stopped out, hey, it's not the end of the world. You can always re-enter it. Yeah, this, to answer your question, this would be reversal pattern number 3. Quick. The price is pushing to the upside, price is pushing to the downside. When you see stacked imbalances, boom, that is your trade. Obviously, remember about the swing failure pattern, but other than that, in terms of reaction, that would be your trade. When the price action is very slow, consolidating after a level touch, how do you handle that? You wait. You wait, right? Because if you see a range forming, you know, you can use the information that I shared in the last stream. So if you see a range, trade the range. But other than that, in terms of reversal patterns, you know, you need to wait. If you don't see the conditions for the reversal pattern, if they are not there, you just wait. There's no need to enter the trade without a very, very good confirmation. And remember, the confluence. You need to have the confluence there. If the price is just consolidating there, it is better to wait. My best guess, and from my experience, obviously now the order flow and volume, it needs to check that. But let's say you have your confluence. You're looking for a long, for example. You have your confluence there. And instead of a fast reaction, right, could be reversal pattern 1, 2, or 3. You want to see a reaction. If instead of that, you see like a range, it is better to wait, right? Most of the time, if you see a range, the trend, the main trend will continue. But in this situation, it's better to just wait. Next question. There are situations when we have liquidation as the price approaches a level. What do you make of that? You need to wait for the price to touch your level. That is the way that is the best way to handle this kind of situation. Sometimes you get a small front run, and that is where you need to use the order flow to actually to understand if you have a reversal possible there or not. But other than that, obviously you see liquidation. So the price, let's say, is pushing to the upside, liquidation, pushing to the upside, liquidation, pushing to the upside, liquidation. So at that point in time, as long as the market structure is bullish, there's no reason to short. If you have like a good confluence, then you can actually apply one of these reversal patterns. Really depends on the situation. And if you see that change in market structure, the backtest and something like that, then you actually have a trading setup. But without a good confluence, you know, you can see the price pushing to the upside or to the downside with liquidation, and with everything that you want to see, you need a good confluence there so you can actually take a trade based on these reversal patterns, that at least the one that I'm using. Okay, let's see if we have some more questions. Yes, we do have a second batch. Let's see. Boom. How do you handle the fact that liquidation, no matter in what direction, can be filled while the candle is forming? Again, really depends on the situation, and most important, you need confluence, right? Without a confluence, there cannot be a trade, and everything that I've talked and I explained this doesn't make sense. You need the confluence. When you have the confluence, so the fact that imbalances, no matter what direction, can be filled while a candle is being formed. So that would be exactly what I was trying to explain earlier. So if you see this, right, and in the same candle, instead of this candle, obviously now you need to watch that that candle forming in real time, and that is why I mentioned that stream that we had somewhere in spring. Because in that stream, we could see like the price pushing to the upside with buying imbalances and then reversal in the same candle some of those buying imbalances were filled and stacked selling imbalances was formed. So for me, that is not a problem. So in the situation, so if you see the price pushing to the upside with buying imbalances, and then you start to see selling imbalances forming here, and some of these buying imbalances are filled, that is a good reaction for me. That is one of the best reaction that you want to see, because that will show me that a lot of people are willing to participate, a lot of traders are willing to participate to short that move. So that is a good reaction. And actually it is a very good question. With the imbalances, does it makes a difference if they come on increasing or decreasing in open interest? Big difference, but I cannot cover this today because that will be a big discussion, but they make a big difference to understand how the imbalances are formed and to create the context. But please allow me to not to answer this question because I will cover that in depth next week. Like I said, this week I start because it's too much to cover in one stream. So I covered market structure, volume, imbalances, and liquidations. And next week I will cover open interest. But to answer your question, yes, it makes a big difference, to be honest. How do you quantify big liquidation visually? So I'm not checking like how much visually. So the dots, it needs to see something there to give you confidence. How do you know what value are the liquidation? How do you know what the value of the liquidation? So I just look at them visually. So that is the way I'm looking at it. Could you please show how to set liquidation setting in Excel for Excel desktop? I can show you my liquidation. So this is the one, right? So these are the settings that I'm using. So it's actually the default settings for this. So I'm not using anything crazy. This is what I'm used to. This is the default setting for this. You can ask for this. It is available on the website. You can pose the question in the trading help channel and you'll get the same results as mine. So this is the setting that I'm using for liquidations, right? So I'm not looking at, but it has to be something to give me confidence, right? So this is good. I mean, you can start to see liquidation in this candle forming and down here and here. Again, the bigger the liquidations, the bigger the chances for a possible reversal. But we need to remember we still need that confluence. So here we had the confluence, so we can build a case based on this. If this is a good trade or a bad trade, that is totally different story. But I'm checking this like visually. You want to see a lot of the bigger the liquidation, the better the chances for a possible reversal. So I'm not checking like how much we have here. No, you don't have time in real time. There is no time. Visually, boom, you see this, you go for the trade. You see this together with this, you go for the trade. Again, could be a good one or could be a bad one. That is totally different story. Okay, and the last one. How do you know a retest is a retest in a trending day or not just another leg down? The confluence. Once again, you're not trading this in the middle of nowhere. You need a good confluence, a confluence to give you confidence. That is the easiest answer. In a trending day, you need a even better confluence, but because in a trending day, the easiest way to trade is to trade the trend. If you want to trade against a trend, first of all, and remember, context and confluence. Then you can use all this information for a possible reversal. But in a trending day, you want to see like a very good confluence. Multiple confluences if possible, because you are trading against the trend. And the best trading idea is actually to follow the trend. But again, good confluence, something to give you confidence, right? Especially in a trending day. And in a trending day, it is better to be a bit more aggressive with your take profits. take profits faster than usual, move your stop loss at entry, or you can close your entire trade. Best case scenario, you follow the trend. So let's say the trend is down, you are already in a short, you book some profits, you move your stop loss at entry, and you keep booking profits, but also you let it run as much as possible. In the same time, you have a good confluence, something to give you confidence. You see the reversal pattern, 1, 2, 3, doesn't matter. Applying, you see everything that you want to see in terms of market structure, order flow, and everything, then you take the trade. But because we are in a trending day, you want to be a bit more aggressive with your take profit or close the entire trade, if necessary. Again, really depends on the situation, but to answer, how do you know? You don't, but you trade, right? And this is why it is important. And I think I mentioned this a couple of times already. You need a good confluence to actually to give you confidence for that trade. Other than that, the reversal pattern will not give you a trade. The reversal pattern are only giving you that trigger for the trade, but you need confluence. Yeah, I hope my answer is the one that you're looking for, or at least it will help you with your trading. Let's see if we have some more. No, I guess those are all the questions that we have for the moment. Yeah, the price is still consolidating here, the volume decreasing. Hey, that's good. Okay, so let's get back to our stream with the conclusions. Up to this point, I presented the reversal pattern using only a part of the indicator that I use to check the reaction, the market structure, the volume, liquidation, and imbalances. And it should be good enough to trigger an entry, especially for a beginner or an intermediate trader. So to get that trigger for the trade. This is why I choose the market structure, volume, liquidations, and imbalances, to give you that information, only the information necessary for the trigger. Next week, I'll go more in depth with the reaction, and I'll explain the open interest, delta, and CVD, and how to use them for reaction, and also how to create the context for the trade, because the CVD and open interest can be used to create the context for the trade. The trigger, I explained it today. That is the trigger, but to create the context, right, and to get more information about the possible trade, I will cover that next week with the open interest, delta, and CVD. Until next time, thank you for everything, and happy trading. Yeah, that is the stream that I planned for tonight. I hope it will help you with your setups, especially with the trigger part. Like I said, I get a lot of questions about what is the trigger, what is the actual trigger, when do I enter the trade. So I hope this stream will help you with the trigger for this for the trade. Other than that, I will catch you tomorrow morning for the next daily update, and obviously I will catch you next week when I will continue with the reversal pattern updated part 2. Until then, thank you for everything. Cheers and bye bye.